This question that you're going to be looking at now, it covers the impairment of asset. It is part G of paper 2 for January 2025. We are required to prepare, based on the information on the Centene store in section 4, an extract of the French card SA 2024 property, plant and equipment note, as it would appear in the note to its financial statements. Total columns are not required. Round all the calculated amounts to the nearest rand. So what do we see here? We're required to calculate the note for the Centene branch as it would appear in their financial statements. So it's basically an extract in the financial statement of the holding. So you know that section 4 is the one that has information about the struggling and the impairment of Centene office. And then what we see as well is that total amounts are not required. That means we just need to list the asset or the PPE item for the note. However, you are not required to cast for the total. And the next thing is that we need to round off to the nearest rand. So we're going to do the same thing. We'll go back to the scenario, read the section, or summarize the section for the part that will need to calculate the amount to be included in the PPE note. We've already been told that this is in section 4, so we'll go straight to section 4 in our scenario. This is our section 4 of our scenario, and it talks about the impairment of South African operation. What we are told here, we are told that this branch is performing poorly. It's not doing so well. And then it's actually the whole South Africa business is performing poorly. However, the information that we are given to perform an impairment test is for the store that is in Johannesburg, Centene. We are told that it is worst performing shop or store rather. So what else we are given? We are given the affected asset as a 30 December 2024, and the asset they provided us, it's land, building, furniture and fitting, intangible asset, financial asset and inventory. And the total value of all this asset, it's 28,260. Then the additional information that they are telling us is that the property, plant and equipment and intangible asset has been calculated in line with the respective standard. Similar with inventory, they're saying that it is held at lower of cost and non-realizable value. And then they're saying also the financial instrument are amortized correctly. Meaning to say they're saying all this amount here, there is nothing that is wrong on them because they have been calculated in line with their respective standards. And then we are told that goodwill of 120 is included in the intangible asset. That means in this 200,000, we have 120,000 for the goodwill. Moreover, we are told that this store is classified as cash generating unit. That is in line with International Accounting Standard 36, impairment asset. The additional information which is more important is that we are provided the recoverable amount. And we are told it's 24 million. Why are we provided the recoverable amount? Because they want us to determine the impairment. So we are to determine the impairment amount. Because for us to know what is the carrying amount, we need to remove the balance that we have with the amount of impairment. So when it comes to the impairment, the standard that guide us, it's IAS 36, which is the impairment of asset. So what do we know about the impairment of asset? We know that the impairment of asset, it excludes the financial asset and the inventory in its scope. What else do we know? We know that they are saying if there is impairment of a cash generating unit, we need to first allocate the impairment fully to the goodwill, and the impairment on goodwill should never be reversed. So those are the important thing that we know for now, is that this two assets, which is financial assets and inventory, is not taken into account, or it's excluded in the scope of International Accounting 36. And then we can see that because this store is not performing so well, we need to calculate the impairment. So by looking at the total value of the asset of 28, comparing with 24, you can see that this 28 is already bigger. However, even though this 28 is already bigger, it includes the assets that are excluded in the scope. Now that we've seen what we have in our scenario, let us go back and look at the suggested solution. So in our suggested solution, we have the extract of the note, and then we have calculation. So we're going to start looking at the calculation, understand what we have in the calculation. Once we understand what we have in the calculation, then we'll be able to move up and do our financial statement or the extract for the note of PPE. If we look at C1, it talks about impairment loss. How do we determine the impairment loss? Is the carrying amount that we have been provided for all the assets of 28 to 60. Then we minus the recoverable amount which we provided of 24 million. Then just for bringing the amounts that we already provided, we are getting 1 mark. Then the impairment loss that we determine is 4,260,000. Now we know on this impairment, we need to do a full allocation for the goodwill, and that should never be reversed in future. Where do we get the amount? We're getting in the scenario. We were told that in the intangible assets amount, we have 120 which relate to goodwill. Just for bringing in the amount you've already been given, you just get 1 mark. Then we have remaining balance of the impairment loss that we need to further allocate. Now, when it's come to further allocating of this impairment loss, what do we know? What is the other thing that we know is that when we're making allocation, this 4140 or 4,140,000 should not be allocated to the assets that are excluded in the scope. So what the ISA 36 says, it says it's applied to all assets with the exception. So they said there is an exception of IFRS 9 as well as the exception of inventory. So with that being said, then when we are locating the impairment or the remaining impairment after we've excluded the goodwill, we should not take into account those two assets. So what do we need then to do now? We look at the total carrying amount. We subtract these two assets, which is financial assets and inventory. We further subtract the impairment that has already been subtracted. Then we get the balance of asset after excluding the goodwill, which will be fully eliminated, after excluding the two items that are excluded in the scope. Then we're left with 15,690. So that is where we're going to then allocate the balance of our impairment. Now, this is alternative. You should not worry about the alternative one because it gives the same amount. But if you feel this one will be easier for you, then you can go ahead and do it. But just to summarize for you, on the alternative, we only take into account the assets that are in the scope of if international accounting start at 36. And those that are either fully eliminated, like goodwill, as well as the other two, we exclude them or we do not take into account. Then we get 15,690. Then we're going to have to do allocation. When we're doing allocation, we know we're allocating 4,140,000 on the 3 items. Then it's going to be the impairment we're allocating times the carrying amount of that asset divided by the balance that we have. For all of them, we're going to do the same thing. So the 2,250 is coming from the information that we've already been provided in the scenario. 3,860 is coming from the scenario for building. And then for furniture and fitting, it's 9.5. It's also coming from the scenario. Then the amount that we get for land, it's 593,690. And then when it's come to building, it's 1,018,509. And then when looking at furniture and fitting, we are allocating an impairment of 2,506,692. So you're going to get part mark for this. Even if the amounts are not correct, you're still going to be provided, or you're still going to get the part mark as long as your train of or the calculation that you are making here, it's making sense. Why are you getting part mark? Because the examiner know that you might have this wrong, which is the balance to be allocated or the remaining impairment loss, or you might have this amount wrong. So for that reason, they're saying if you're showing that how you're going to calculate the balance of impairment for each item, you're going to get part mark. Now, what are we going to be doing? Now we need to say this total value of the asset, 2,250, 3,860, 9,500, and we subtract by the impairment because that will give us the carrying amount. So you can see this impairment loss. We are subtracting it on the values that we have. After subtracting, this is the balance that we have. How to get this balance? For the land, you are saying 2,250,000 less the impairment of 593,690 or 593,690, and you're left with balance of 1,656,000 and 310,000. For the land, we had a balance of 3,860,000, and we calculated the impairment of 1,018,509, and the balance that we're going to be left with, it's 2,841,491. It's the same thing for furniture and fitting. We have a balance that is in the scenario of 9,500,000, and we have to subtract the impairment of 2,506,692, and we're left with a balance of 6,993,308. So you see, this was very important for you to know that you need to calculate the impairment. They've told us that these amounts are correct. They said they have applied the respective IFRS for this amount. But even though they apply the respective IFRS for this amount, these amounts are still not correct, or we cannot use for the PPE notes because the impairment amount have not been considered. So the important thing that was sitting here is for you to calculate the impairment and subtract on these amounts. And then you get the carrying value or the carrying amount that we should have in our note. And it was important for you to understand there is no depreciation or whatsoever you have to worry about here because it has already been calculated for you before they gave you the extract. So that is the most important thing to note. So whatever you could have made here, Number one, you could have made an error of not knowing that goodwill need to be the impairment need to be first allocated to the goodwill amount. The second part, you would have missed that the financial assets in inventory are excluded in international accounting standard 36. That to mean when you are allocating the impairment, you should not allocate to those two assets. So those are the errors that you would have potentially made. And the last error is that when you are doing PPE note, you would have brought in this amount and not calculate the impairment. And you would have lose all the marks for not calculating the impairment. So those are the important things that you have to take into account. You have to know the standard that you are working on. What are the exclusions? Because if something is excluded, for example, in this case, the financial assets and inventory, we cannot take them into account when we're making the allocation of impairment loss. We have to consider only the items that are included or that are not exempt per the standard. It's the same thing with goodwill. Goodwill, the standard says first allocate the impairment to goodwill, and you should never reverse that allocation in future. So, meaning to say, if we were to have a reversal of impairment for this cash generating unit, we cannot touch this one. It's an impairment that you allocate and it's permanent. However, for this allocation, if there is a reversal of impairment in this cash generating unit, we can reverse this one to an extent of what would have been the carrying amount had there been no impairment before. So now this takes us to the end of the question. We are now done with this question. Thank you so much for taking your time listening to this me going through suggested solution. Can you please like, subscribe, and share my channel, both my YouTube channel as well as TikTok? My YouTube channel is Economics 199. Similar with the TikTok, it's Economics 199. Please share, subscribe so that we grow our channel. Thank you so much. Bye.